In this video, I'm going to break down exactly how I made $20,000 trading this week in one of the hardest weeks we've had in the markets in maybe a few months, using proper risk management and exactly knowing which themes are going to make big moves up and capitalizing on the best sectors within the market. This is how I'm able to separate myself from other traders. I know exactly which theme is going to move and which stocks are going to lead the markets higher, even if the markets pull back or they're choppy. That way I'm in the best stocks. So no matter what happens, if the market pulls back, if it goes up, if it goes down, I know the stocks I'm in are most likely going to have follow through and continuation because they're the best stocks in the market that are leading the markets higher. So in this video, I'm going to show you exactly how I know which sectors and which themes to look at, how to find the exact stocks that I'm going to trade, and exactly how I entered and exited these positions, as well as the losses that I took, because not every single trade was a win. It's all about risk management and letting your winners run, cutting your losers very, very quick. And in this video, it's going to break all that down. So make sure to lock in, study, and be ready for the upcoming weeks. All right, so the first thing you want to do is always get an idea of what the market is doing coming into the trading week. What I like to do is a major market scan during the weekends. That way I know which theme is strong, which theme is weak, and also what the markets are doing, right? So for example, looking at the markets over the last 3 months, since this bottom right here, we've clearly been on a very strong uptrend. We continue to make higher lows and we're making higher highs, higher lows, higher highs, right? So we're clearly trending to the upside. Knowing that, I'm very bullish, right? So a lot of people might be, scared to buy all-time highs and scared to buy things when they continue to go higher because they think they're so extended. But if the trend is telling you that the market is going up, why am I going to fight the trend, right? I need the market to prove to me that it's going to break the trend and then start doing something like this. And then I flip my bias and I look to short. The issue with a lot of traders is they'll miss out on this whole move thinking that, there's a big move down coming. They'll try to time the top, 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 right? And the whole time, they're missing out on the big moves that are actually happening within the market, trying to catch that perfect move up. This is why you have to trade the trend, because you're never going to know if there's a top. You're never going to know if there's a bottom. You let the markets prove to you that a trend is beginning or reversing and a new trend is going to begin, right? So that's how you're supposed to approach trading. So what I do is I look to see what the trend is on the market. So right off the bat, I'm on QQQ, which is the NASDAQ. I want to see what the tech sector is doing. So I'm labeling the big levels that I know on the chart. Right here was a big spot for the NASDAQ because it was the previous all-time high, right? It was the highest point that we've gone on since, ever on the NASDAQ right here. And we actually broke above that spot earlier in June. So when I saw that, I knew there was going to be a pretty good momentum on the breakout for the markets. And I had a good feeling that, the markets are going to push higher because this is just a breakout of a clear level. Now you know exactly where you're going to risk, but you know where the market is going because you have the blueprint. You know what the markets are doing, right? So right off the bat, I'm always doing this to make sure I understand where the markets are at. So I was seeing this as we were approaching this kind of spot right here. A lot of the trades that I did have that were my biggest winners were ones that I added actually the previous week, right? So even though this week was when I realized the gains, a lot of these gains came off of last week's plays. So where I took most of the stuff was right as we were breaking out of this kind of spot right here into kind of Friday and then the next week, which is last week technically, as we were pushing up higher here and set up into this AEMA, I kind of caught this small little pop here and set up a bunch of, individual stocks. Now, going into this week, which was right here, we were starting right here, which was Monday on this gap down, I actually had a feeling that the markets were a little bit extended. We had this big close on Thursday, and then obviously 4th of July, the markets were closed. And I had a feeling that we were a little bit extended. What does that mean? Well, if you look at the exponential moving averages, which are these lines right here, you have the 8 EMA, 21 EMA, and 50 EMA. These are basically telling you what the trend of the market is and where the momentum is. And what I was seeing was we were pretty extended away from the 50 and 21 EMAs because you'll notice when stocks go in a strong trend, what they'll do is they'll start trending and then they'll kind of use the moving averages as fuel. So you can see right here, for example, the stock does not break the 8 EMA once, right? But the moment it does break the 8 EMA, it comes all the way down to the 25 and the 50. Then it uses that as fuel to make the next leg up. And then it does the same thing. It holds the 8, next leg up, sets up, next leg up until it finally breaks and it can't hold the 50. Then it starts downtrending a little bit. And then it starts doing the same thing. You can see right here, it holds the 50, moves up. So sometimes stocks need these kind of, touches to make the next leg up. So knowing that going into this week, my mind was just be risk managed. No matter what, try to manage my risk as much as possible, because I can make a lot of money, or I can manage my risk when things don't look like they're, the best conditions, and then protect my capital. So then I get to live another day and trade better, let's say the next week, right? When there's more opportunities, or the week after, right? So in trading, it's a marathon, not a sprint. You have to understand sometimes you might have to even think about survival. And I think this week, this is what helped me remain super profitable and even have a pretty big week, right? Like 15,000 in a week is pretty good for me. It's not, a massive week, but it's not, a bad week by any stretch at all. That's actually a pretty good, week for me. So doing it in this type of market to me is more impressive, but it's because of the mindset that I had going into the week. And it's because I went through the market and I understood where we were and how to take advantage of things. And the real reason that, I had such a big P&L is because I realized that tech stocks were a little bit extended. But then if I went through, the different indexes, I saw the S&P was a little bit extended. I went through tech. I went through IWM. IWM was a little bit extended as well. I went through the Dow. The Dow was a little bit extended. And then boom, what did I land on? I landed on Bitcoin and crypto, right? Now you might be asking yourself, how did I trade, Bitcoin? You're doing a stock and options review of the trades that you took. Now, if you don't know, there's a lot of stocks within the market that move based off of crypto movements. So these are called either proxies, Bitcoin miners, anything related to the blockchain actually will move with crypto. So if you go on this watch list right here that I created, you could see I actually have a list of stocks that move with the blockchain. So this one right here, for example, CLSK has been moving with crypto. This one right here, Coin, has been moving with crypto. These are the stocks that I traded this week because I saw that Bitcoin was setting up for a big move. It broke out on Thursday, and you could see a lot of these stocks had massive moves on Thursday. Also Wednesday as well, as those were getting some momentum. And those are the ones that I took advantage of this week. There's also another one that's called MSTR. This one had a nice week as well. So even though sometimes there might not be opportunities in one sector, another sector is setting up. So it's always about knowing which sectors are the best. And even something like ARK, for example, at the beginning of the week, this is the one that was kind of strong, right? So even though on Wednesday and Thursday, the markets were kind of flat, like they didn't make any big moves, ARK was actually green on both days, which shows you that there is, some sort of momentum in the market. You just have to find it and know which sectors to look for. So this is exactly how I do it. I do a sector-wide scan, and getting even more in depth on the scan that I do, I'll go through all these stocks on my list and I'll see which sectors outperforming. So for example, today, oil was very, very strong. So I know for next week or, Monday that this is actually a very good sector. For example, electric vehicles today had a pretty good day. So I know for next week, right? If you look at the ones that were weak, solar was pretty weak. Credit cards were pretty weak. So this is probably not going to be a good, sector. So now I'm looking to see which ones are outperforming. And you could see there's a lot of weakness today. For example, software stocks were all red, but then boom, nuclear stocks were green, right? So you could still find like these little pieces of the puzzle in stocks. Even though the market's not the strongest, you're still able to find these themes and these areas where there's a lot of strength that you could take advantage of. And that's what I do, especially when the markets are extended and not every single stock goes up. That's easy mode in the market, right? When there's easy mode, every single stock goes up. So you want to make sure you're not only that person that could trade in easy mode. You want to have some tools under your belt to make sure that when things get a little bit harder, we're either managing our risk very well, or we're doing that, anyways all the time. We want to manage our risk, but we're doing, risk management or finding the best stocks at the same time, right? We want to do that together. So that's kind of what I did. So let's get into the trade recaps now and go exactly over what I took. So you can see this is my P&L on TradeZella. So for the week, I made about $15,000 realized. I still have about, 5,000 to 7,000 that I haven't realized yet that I'm swinging over the weekend. We'll see what those do, but realize about $15,000. And you could see, this is coming with even a red day on the week, right? This wasn't like a perfect, week. I'm okay with having losses, and it's all about keeping them small. And I'll show you guys all that as we go through the trades. So these are the trades that I took on Monday. I actually closed all of these out from the prior week. So this was QUBT, Apple, and then Amazon, right? So I'll show you guys this really, really quickly. And then obviously this Amazon one right here, I got stopped out for a small loss on the break even for the last position. But I'll show you guys all the trades really quickly. So the first one that I took was on the ticker Apple. So this one was setting up in a massive kind of daily base right here. It broke out. I ended up adding this one earlier in the week last week, and then I caught it for a quick day trade on this pop. Now, what I wanted to do was I thought this one was actually going to have a very nice move out of this base, right? So it's going to break above these highs right here, take that high out, and then I was going to target the gap fill. So I actually ended up adding and rolling over some of my profits into a longer term 1 month out option around this level right here. Now, this isn't a trade that I really set up perfectly in terms of my entry because it was just a rollover trade. So a rollover trade for me means I have profits that I took on either a day trade or a shorter dated contract, and then I roll it over to let the trade have a little bit more time and buy a farther out expiration because I think it's going to continue to go up. So I added this one right here, and my stop loss was this low right there. My first target was actually this high, which it hit, and that's where I took profits. So the reason why these wins were so small is because I actually took profits on these. So I took profit on Apple, and then you could see I actually got stopped out break even on the rest. So I bought it at about 518. I took profits here, and then the rest of these I got stopped out break even. So sometimes that happens with trading, right? You get stopped out break even, and it happens, right? Like, so you can see right here, I added the position. It ends up kind of going sideways a little bit. And then the next day it moves. I didn't, sell all of it, and then the day after it has the big breakout. It hits my first target, which was this high right here. I sell most of the positions, stop goes straight to break even. So that's how I manage my risk, right? So I'm managing my risk by basically moving up my stop loss after I'm hitting my first target. So if this is my first target right here, I take the first trim, I move the stop to break even. If it hits, it hits. If it doesn't, it doesn't, and it continues to run. But the reason I'm doing that, and the reason I move my stop loss up, and the reason why I think it saves me so much in trading is because with my strategy, specifically breakout momentum trading, you want momentum. It's very simple, right? If a stock is breaking out, I don't want it to come back into the range because now all that tells me is the stock is probably going to consolidate longer. So I might as well lock in my profits and manage my risk. Those are the two things that save me. I manage my risk, I locked in profits. So even though this one was technically a very small win, it was only 10% on the whole position, ROI, right? The first trim that I took was actually like a 25% trim, but getting stopped out on the rest of the position made this only a 10% win, which is very, very small, right? Like risking 5,000 to make only 10% is a very small win. Obviously, like I would love a way, way bigger win, but if the market doesn't give me that, I'm managing my risk, right? That's the most important thing that I'm doing. So that was the first trade there that I took on the ticker Apple. Now, the next trade that I took was on the ticker Amazon as well. This is one that I swung and also had a small little win on this. So we'll look at this really quickly on the 15-minute time frame. I really wanted to show this one because I took an absolutely sniper entry. But you could see, again, I took the entry right here, ended up running a little bit this stock. I was up about 20-30%. Kind of went sideways, and then I stopped out the rest of the position because it just didn't really, do that much. It just kind of went sideways, and I didn't really want to have that much exposure. So again, another small win, but it's because of the fact that I'm managing my risk. So I want to show this one actually for the sniper entry that I took on it. This was on the ticker Amazon. This was in a very beautiful setup on this Friday right here on June 27th. It was setting up in this tight kind of base and flag right here. You could see it was looking like it was about to break out. So this day actually it gapped up. So I'll go down on the lower time frame so I could show you guys the exact entry I took. It gapped up over the level that I was looking to trade it. And when a stock gaps up over the level that I'm looking to trade, I'm never getting in right away. The reason why is because all that happens is that you're chasing the stock. You don't have any data to know where to actually manage the risk. So what I do in these scenarios is I wait for the stock to just simply retest my level. So you can see this was clearly the level I was looking for. I was looking for a retest. Now, I don't just blindly buy the retest. Like the moment the stock touches, I don't just buy it. What I'm looking for is a strong reaction from that level. So sometimes what ends up happening is I'll see that the stock gaps up, it starts going sideways, and then it kind of goes a little bit below the retest level. So it did the same thing right here. But what you could see ended up happening is as it reclaimed the level right there, right? It just got a ton of volume. So the moment I started seeing the volume come in and I started seeing that this stock was breaking out of this pattern, I actually added it right here. So going back to TradeZella, you could see that's exactly where I took the position on this candle right here. Then I had an absolutely massive move up. Now at this point, I was up like 20-30%, but I did not take my trim. Why, guys? Because I stick to my plan no matter what, right? I'm always sticking to my plan. And if I set up a plan and a trade plan, I'm not going to manage my risk until either I get stopped out or, right, or the position hits my target. Because if I manage it before that, what's going to end up happening is, if let's say I have my stop at the low and I'm only taking this big of a play, the risk to reward isn't big enough to satisfy the risk to reward that I usually look for. It's a 1 to 3. I usually like to look for at least like a 1 to 5, right? So as the stock pushes, that's when you're supposed to take profits, when it hits your targets. If it doesn't continue to go up, that's fine. You could sell the rest and then, you get out of the rest of the position. So that's what I ended up doing. And I got stopped out on the rest. I took the rest of this off and it happens, right? And this is going to be kind of the theme of what you're going to see here at the beginning of the week is this ends up always, happening sometimes, but it's for the better. Even though these might, go up later on, it's for the better because you're sticking to your rules. So same thing happened on this ticker right here, QUBT. So another one you could see, I'll go on the daily chart to show you the setup. This one had a beautiful kind of daily flag right here as it was setting up of this inside day, and then it broke the high right here. I entered it right as it was breaking out of this high and ended up running really well. And this one actually did hit the PT, right? It hit it right there. That's where I took the position off. So you can see on TradeZella right here. Let's go on the 15-minute. I added it right as it broke out right there, ended up running really nicely. I trimmed a little bit here and then I trimmed a little bit there right at the open as it made a new high at 225. And then I got, stopped out of the rest of the position later on at break even because again, this ended up, coming down. So nothing I could really do on that. And that is, the trade. It ends up happening. You end up getting stopped out, break even. It's not the end of the world. And that's what good trading looks like. Managing your risk, making sure that, the trade is still managed and you're not just letting your profits go red. And again, with my strategy, this works best for me. For some people, it might work different, but that was the trades early in the week. So not really anything, special, right? You're probably thinking like, how did this dude make $15,000 this week? Because those trades weren't really special, but I'll show you, right? It's good risk management and having the right idea of what to do. So one of my best trades that I took was the ticker Joby. Now, this was a swing that I had from the previous weeks, and this is the one that I really, really want to go over. So this is in the aerospace theme. I started to notice that aerospace stocks were really setting up. This ticker actually had very good news right here. It had Toyota actually took a stake in the company. So it gapped up, it went sideways, it moved well, then it moved higher with a lot of volume. And then it's set up in that perfect continuation pattern that I teach you guys all the time on YouTube, on Discord, on Twitter, on all my social medias. This is the best continuation pattern in the market. Once you start noticing that a stock gets a lot of volume, whether it be on news, anything that, happened or just got a really big move up, it starts going sideways and, doing something called consolidation. And this is where you want to look for the next leg up. The moment it breaks out of the consolidation, next leg up. So here, obviously the stock gapped up, so I wasn't really able to catch it. But then here, it's set up in another one of these. It broke out of this high. I bought it right here as it broke out, and then boom, it ended up absolutely exploding. And this one is one of my biggest winners on the week. You could see around 130% on the P&L. And I still have about 2 or 3 contracts left for the runners, but you could see how I managed this one if you go here on the hourly. So you could see I bought it right as it was breaking out of this big base right there. I bought it right as it was kind of pushing through the highs right there. And then I sold it here on the pop. It came back down a little bit, didn't stop me out. And then it continued to sell, as it continued to make new highs. This is my latest sell right here at 2.4, which was about 220%, if I'm not mistaken. And I'm still in a little bit of this. It did come down slightly, but it doesn't matter, right? Now all I do, put my stop up, I move my stop to the next swing low, and then I just continue to move my stops up for every swing low that's made, because again, I don't want to go red on the trade, right? So I don't want it to come all the way down. So you just continue to play the trend, right? If the trend reverses, we don't want to be in the trend, right? So we want to be out of the trade. So that's how we manage our risk. We make sure that we continue to, let the trades play out. And that was one of my best trades on the day there, Joby. I'll show you guys on the week, sorry. I'll show you the exact entries that I took on this one. on the lower time frames. So what this was doing was it was breaking out over this key level right here. It kind of failed to break out the first time, so it didn't get like a 5 or 15 minute close above. But then what it did is it pulled in perfectly, exactly what you want to see. You never want to chase a stock that just moves this much right off the open. Set up this flag. I bought it right here as it was kind of curling up into the next leg. You could see I ended up pushing really nicely into the end of the day, and then it kind of, flattened out a little bit, but then the next day it gaps up, makes a massive move. I sold most of it here, and then I continue to hold it. Doesn't stop me out at break even here. Continues to hold, and then boom, it just continues to run really nicely. So that was a great trade on that ticker right there. Now that was the best trade that I took probably for the week. I did take another good one, but that was the best one that I took. Now, a few more trades that I took on this day. I'm going to show you the losing trade that I took first, and then I'll show you the rest. So this is actually a day trade that I took on the ticker AMD. Now, I'm actually pretty happy with this trade. It ended up moving kind of good right away, but overall, it just didn't have a ton of follow through because the markets pulled in. Now, again, I planned for this to happen. So you see how like I have, some of my winners are like 130, 150, 80%, but my losers are very small. I lose 16, percent, right? I don't want to lose more than like 20, 25, 30% because I want to keep my losers very small, especially when the market conditions look something like this. So on this setup, the ticker AMD looked really, really good. I'll show you guys a daily setup. It was setting up right under this 140 level. And what I was looking for was a breakout of this 140 level. So on the daily, you could see it was curling out. It reclaimed the 8 EMA. It was starting to push out. And this is where I wanted to take it. Now, this is a day trade, and I don't really usually day trade. But what ended up playing out on this was I was just looking for the 140 break. So this was a lower time frame trade. It hit 140, and again, very similar to Joby, it pulls in, the EMAs catch up. I grabbed it right on this flag. It broke out, but again, did not end up hit my target, right? And the issue that a lot of people will have is they'll take profits too early here, or they won't take profits, but they'll be like, oh, next time I should just take profits at 10%. But what happens when you take 10% wins and then you take 20% losses, right? Do the math on that. You'd have to have a very, very good win rate, if not almost perfect, to make money doing it this way. So you must be systematic. If my stop loss is going to be all the way down here, right? So if I took the trade right here, my stop loss is going to be this low. I can't take profits this early because that's only a 1.3 risk to reward, right? For me personally, now I'm not saying this happens for everybody. I'm looking for at least a 2 or a 1.5 RR, and that was somewhere around this like 141, 142 level, but it just didn't hit, right? So even though I was in profit about 20%, just didn't take the profit. The trade ended up going red. I lost 16%, and it is what it is, right? The moment it hit my stop loss, you could see no hesitation, sold, boom, right? No hesitation. I'm not waiting for anything else. The moment it hits, get out of the trade. I realized that, there could have been better things that I could have done, and I'm okay with that. I go on, and there's a learning process. Now, the issue is that a lot of people will have like losing trades, and they won't be able to learn from them, right? That's the whole point of a losing trade. Would you rather have risk management or regret, right? You don't want to regret that you didn't sell, and then the stock ends up going, really big red, and then you take a huge loss. You want to make sure you have risk management, and then that's way better than having regret later down the line. So for this one, what I could have definitely done better is probably just waited for it to really break out over this level and stay above. And it was probably just a little bit too early. And this is probably why I don't day trade, right? This is why I stick to my own thing and I mainly swing trade, because I actually like to take the momentum within the markets. And you can actually see if I would have swung trade this and I would have given it a little bit more time, this actually would have been a beautiful play, right? So if I would have just, held it as a swing trade, obviously as a day trade, I would never have held it because I was following my plan and my rules, and I'm totally satisfied with that. However, if I stuck to my system and I, took this as a swing trade, I would have been up really well the next day because this ended up moving really, really well, right? So that's, again, something that you learned from your losses every single time. Do things that work a lot more than things that don't work. That's how it always should be. So that was a ticker there, AMD, and the setup that I took on that. A few more trades that I took. So I took CLSK, and then I took SMCI, and I took Coin. So CLSK was another one of those small wins. And again, guys, you might be saying, wow, there's so many small wins and you still had a pretty good week, right? But again, it's all about being risk managed. So this one, I only made about $500 because I got stopped out the rest of that break even. But I'm totally fine with that. Actually, I got stopped out a little bit lower because I think it gapped down the next day. So I actually lost a little bit. So you can see right here, I got in right here, ended up hitting my first TP right here. And then I actually got stopped out the next day as it gaps down a little bit below my original entry. which is unfortunate. I lost a little bit of money on that actually. But I'll show you guys the exact setup, why I took it, how the setup looked, the entries, everything like that. So I took it right here on this day. So it was setting up in a tight flag, very similar to the Joby setup. It broke out over this level. I actually grabbed it right here as it broke over 44.50. Yep, right there. You could see it broke out into the end of the day. This is where I sold it in the morning because it satisfied my risk to reward, right? Because my risk was the low of day right here. So this was my entry. This was my stop loss. This was the target. So actually I had a 3RR on this, and I'm actually very disappointed with a 3RR that I only ended up making $500, but it is what it is, right? The options sometimes get a little bit, kind of cooked, I guess. And the value drops really fast, and that's why you want to have proper risk management. So even though, it ends up being a smaller win, I managed my risk really well, and it ends up, being a winning trade. And it could have been a losing trade if I didn't manage my risk correctly, and it would have let it go red, right? Because now you can see it's coming all the way down. So no reason to do that. Good trades will stay green. Bad trades will go red, and you have to manage the risk on that. Now, this is probably one of my best trades, other than Joby, CLSK. This was an absolute beautiful one. So remember when I was talking about Bitcoin, BTC, as it was breaking out, this is why I was looking at the ticker CLSK. So if you're not familiar, there's miners in the market, basically companies that mine Bitcoin, right? So if they're mining Bitcoin, they basically are moving with Bitcoin, because the more they mine Bitcoin and the more the value of Bitcoin goes up, the more valuable the company becomes. So CLSK is a Bitcoin miner, a data center. So this is why I was watching this one. What I was looking at for this was it broke over this kind of flag here earlier in last week. Then it pulled into the 8 EMA, and then it set up in again another tight flag here with this inside day. So this is what I was watching, the inside day high break. You could see it set up an inside day on very low volume. So inside day basically means the stock traded within the previous day's high, previous day's low. And then I took it on the break of that spot as it was pushing out over that level, and then end up swinging it and catching it all the way up into the high. So let's go on that trade so you can kind of see that happen right here. I'm still in this one again. I do have some pretty nice profits already, but I'm still in. So you could see these are the 3 trims that I took. So right as it hit the high right here, took a trim. Right as it hit this high, took a trim. And then today, as it opened in the morning and it was up here at the highs, I took the trim. So this is my first target right here. My second target was this kind of wick right here that was taken out, and we hit that. And then my third target would have ultimately been right here. I mean, I'm still in the position, so it could hit, but it is, it is weakening a little bit with the market. That's totally fine. And yeah, this is still a good trade. It hit about like an 80% on the last trim. So far it still only says it's a 31% net ROI, but it's because I have some of my positions still open. So this will probably go up a little bit as we go up. But yeah, the idea on this one was the break of this flag. So let's go down to the lower time frame, see how we executed this one. So you could see it's consolidating right under that inside day, high right here. The moment it started breaking out and there was some volume, I grabbed it right here. Stop loss goes to the low of day. And let's see if it satisfies the risk to reward, right? This is the stop loss at the low. This is the first target. Boom, 1.88. Exactly what I look for. Almost a 2, right? Over 1.5, anything like that is perfect. This was almost a 2. And then you could see as it comes all the way up, now it becomes a 3 risk to reward, right? So this one probably should continue to go up. Hopefully it doesn't stop me out at break even, but I do have a break even stop just to manage risk in case it does come down. But yeah, another really good one. And I made about $2,000 on this. And then another crypto stock that I traded was the ticker Coin. Now this one was another day trade and actually ended up working pretty well. So sometimes, day trades still end up, going in your favor and working out. It all depends, right? It all depends. So keep that in mind. Like for me, sometimes day trades work well, sometimes they don't. I'm always trying to do more of what works and more, less of what doesn't. But this was the trade that I took on the ticker Coin. So this one was a pretty nice one as well. It was setting up right under the previous high right there. And it was just a very simple previous day's high break, right? So you could see the stock has been setting up in a tight flag like so, like a pennant right off the 8 EMA. Exactly the continuation pattern that I teach. Beautiful, picture perfect. Bitcoin's breaking out. So we know Coinbase is obviously a proxy for crypto. They sell they're an exchange, a broker for crypto. So all the fees, all the stuff with Bitcoin going up, they're making a ton of money. So this is why I was looking at this one. And then I just took the break of the previous day's high right there. So you could see into the end of the day, the moment it started to break out over the previous day's high right here at like 3 or 2 o'clock, bought it as it was breaking out. And then I swung this one and it ends up running really well the next day, right? And then I think I sold most on Friday as it was kind of coming back down. So let's actually see the exact sells I took on this one right here as it was pushing up. So yeah, I bought it right here as it was breaking the previous day's high. And then you can see I sold some here into my first target, which was, what do you know? Previous high, right? Pretty simple. For this one, my stop loss was this low right there. So let's see if that satisfies the risk reward. That's one of the most important things. You can see it ends up, satisfying it at 2 risk reward. And obviously as it hit my final target there, it was almost a 4, which is great. So you could see, yeah, I end up taking some profits there. And then I actually took a little bit of profits today in the morning because it had a little bit of a failed breakout in the morning. You could see like right off the morning, it wasn't pushing higher. I didn't like the way it was looking. I just wanted to take profits on this, right? I didn't want to over leverage myself for the week. And I think it ended up being the right decision. This could still probably go higher, but I don't really want that much risk. This was intended kind of like as a day trade, but I ended up swinging it and still made about 137% returns on it. So pretty nice trade. And then last trade of the week was actually 2 more trades. I had Lunar and then SOUN, which ended up being a loser. So Lunar so far, a pretty nice winner, even though this one should have been way bigger. I'll show you guys the setup on this. It ended up being about like an 80% win, but into the end of the week, into the end of the day, it just faded, right? And this is why it's so important to have risk management, because this could have been an absolutely terrible week. Everything just faded, even though the positions that I took moved really well, just faded later on. So this one I took on the trade setup right here, had a massive weekly and kind of daily base, broke out of this wedge right here, then popped out, and then I bought it right here as it was popping out over the high. And I ended up swinging this one. Stop was at the low of day. I was targeting this high right here. And what do you know? It hit it almost perfectly. Ended up being a massive trade in the morning, but faded all the way back. So guess what I did, right? Let's look at some of the executions. So you could see I end up selling a good amount of it on the first gap up there in the morning. So like literally the first second of the morning, 9:30, 11. So let's look at the morning. Yeah, like right off the morning, I sell a little bit. Then I sell another, small position size because I want to lock in a little bit more profits as it goes up. Because I had a feeling the markets weren't going to hold up really well, and I was totally right. And then I sold the rest into the end of the day as it just looked like it was going to fade, right? And I'm glad I did because, again, look, it came all the way down. So it was either stop out, break even, or lock in slightly more profits, and that's exactly what I did. And again, I'm comfortable with all this, just managing my risks the whole time. That is the most important thing to me. And then last setup I took is SOUN. And this one was maybe slightly bigger of a loss than I wanted to in terms of percentages. And I actually had multiple times to trim this one. But this one was a really nice breakout that occurred earlier in the week. This was like right at the beginning of the week. But again, I just took smaller size on it because I had a feeling that the markets just weren't that good because of how extended they were from the moving averages, which I talked about earlier, right? So it broke out of this big base right here on Tuesday. And then it kind of, set up into the middle of the day. I actually bought it right here. So as it was pulling in right here, I bought it right here and on this candle. And I actually had a pretty nice move, like into the end of the week. If you look at this position, I was actually green on it, but I just didn't end up selling it. So you could see, because it just didn't hit my target, right? So you could see it again, I bought it on the 15-minute flag right here. So right there on the chart, and you can actually see that on the actual stock chart as well on TradeZella, and it ends up running, right? So like if you look at the premiums at one point, I think I bought this at like I bought it at 1.65. It ends up running all the way to 2.0, right? Which is a pretty decent gain. I think it's about like 10 or 20%. And actually this day it ends up running all the way to 2.05, which is like, like a 20% maybe gain, maybe 25%. But I didn't take profits because again, I have my target, I have my plan. And if I'm risking, this much, so this one ended up being like a 22% loss or 23% loss. If I'm risking this much, so my entries right here, and I'm risking the low of day, right? If I'm risking this much, I can't possibly only take profits at this level right here. And I'm trying to explain to you guys why that's the reason for me. I can't take a 20% win for my first trim and then take a 23% loss. That would just be too much risk. So what I usually look for is my first trims need to make sense, right? So I look for at least like a 2 risk reward. And that's my idea for this trade. I thought I was going to get some pretty good momentum. It didn't end up doing so. I probably should have sold this one earlier, right? Sometimes I make mistakes and that's okay. This is why I go back, review these, and even do this for you guys, because I want to show you that even with mistakes, as long as you manage your risk and you have a strict plan, and you actually adhere to your stop loss, I don't care if it comes back up the next week, right? I don't care what it does, because at that moment, my trade thesis is invalidated. Could it build a new trade thesis and then could I add it later on? For sure, but I don't care about all that stuff. All I care about is managing my risk, following the plan, and that's how I know I'm going to be a great trader later down the line. Even though I'm already making money, I know it's only going to get bigger and bigger and bigger because I'm following my system. I'm not focused on making money right now. All I'm focused on is my system, and I know it makes me money because even with weaker markets like this, I was able to make a good amount of money this week, all following my system, having risk management, and putting that all before anything else. So yeah, guys, I hope this video helped you out. I hope it gave you some good sauce that you could use for next week. Remember, risk management is the most important thing to begin with. And the next thing is making sure that you're trading the right themes, trading the right sectors, because even if the market's consolidating, there still could be very good opportunities. So always trade the right stocks, always trade the right sectors, scan through the sectors, scan through the stocks, trade the leaders, and you'll do totally fine in the markets as long as you manage your risk, and you'll make a ton of money.